Welcome everyone to my new educational video presentation for Ticktick trading straight to funded Project X. I would like to talk to you about the formula to hack the consistency in the fastest way possible. As we already know, it is 20% consistency, which is quite clear what does it means. The highest day cannot be worth more than 20% of your total profit achieved. Simple, very simple. Continuing, I'd like to talk to you about it and share with you how you can achieve that 20% consistency with different strategies in terms of finance and risk management the fastest way possible. For those of you that would like to grab your accounts, there is 50% discount with a coupon code SCRAMBLE that you can access at the checkout. The link to sign up is in the description area. Then you want to go to members area, Project X, and grab the accounts you guys care about. Do not forget to participate in my Discord about prop firms. We're trying to construct a community, a healthy community, a strong community of traders that have the same purpose, making money in the fastest way possible, in the most stable way possible for long term. Has a great journey. Great. So let's talk about a strategy, fellas, and have a nice chill conversation. Any thoughts, anything that you consider, let me know in the comments area as well. Like the video, subscribe. That's it. Now, there's a few things that you have to know from the beginning, and those are pointed on the top right corner. No minimum trading days Ticktick trading requires, because they kind of redirect you by having a 20% consistency and the payout threshold. Each type of account has its own payout threshold, which is at 5% increase based on your starting balance. Once you achieve your payout threshold, you can cash out, right? So actually you don't need to be having that specific rule of minimum trading days if you have the ones Ticktick has. 20% consistency and the payout threshold that I've mentioned. These are very important. There's other things as well, but these are the main ones. On a $150,000 account, which is the most popular, and of course we know why, quickest possible way to grab your 20% consistency and hit your payout threshold. So quickest possible way to achieve your payout is to 5 days. 5 days is the minimum. You cannot achieve a payout faster than 5 days because of the 20% consistency rule. 7,500 is your payout threshold for a 150K account. Simple. You divide it to 5 days and it gives you the amount of money you have to earn daily in your balance. This is something that has to be your growth, right? On top of the commission, on top of the fees you pay, this has to be on top. Every single day for 5 days, you're good to go. You got your consistency in 20 and you have your threshold as well. Compared to the daily max loss, which is a soft breach rule, this is, that's $3,750. $1,500 a day is, a little bit less than that. You're, a little bit less than half of the daily loss limit. And it's definitely not easy to achieve this number, right? Obviously, it is not sitting on that side of the most complicated things, such as the $2,000, $2,500 daily, which is probably the most complicated, close to $3,000, which is something, by the way, that I'm trying right now. But obviously, stop losses are quite right there next to you when it comes down to the management. Now, the moderate option is where you are dividing your performance to 7 days. Your target of 7,500, you divide it into 7 days. This gives you a nice edge, and it allows you basically to function around $1,080 daily, which is about 40 to 40% less than in the option number 1 every single day, right? So that's a significant percentage out there. You have to produce less daily for 7 days. That's another thing. You have to trade 2 more days. And we know the fact that the more we sit in the market, the more we have to open up trades, the more we are exposed. Any exposure means the unpredictable side of the market as well. That happens in certain cases. There is a game of probabilities, and we're always going when our probability is strong in a direction, but that doesn't mean that within the next 20, 30 seconds, things in terms of probabilities cannot change. They do change, which is why we get our stop losses touched, or why we lose money. even though we had a great entry, yet at the end of the day, that trade could end up in a loss. It is absolutely normal when it comes down to trading because of the unexpected side of the movements that could appear at any point, right? So the more you sit in the markets, the more you're exposed to that unexpected side. Now, of course, the thing is to handle the whole process from the risk management standpoint correctly. Let me tell you something, fellas. Prop firms make money by having people losing their evaluations, losing their funded account, losing fees. It's one way prop firms make money. Some prop firms make money with live trading. Some prop firms have other sources of incomes for sure. It's a stronger stream for some of the most successful prop firms. But the main source of income for the majority out here is just people wasting resources and trying their best into the trading performance. The rules that are set are to filter as many traders possible in order to generate profit for the company compared to the payouts they're doing. This is something that is based on analytics and the usual performance of their client base, which is definitely not the same like other firms and so on. It has to be tested, it has to be played around, and things needs to find a balance between the cost and profits, right? So this thing right here is obviously the more you're in the markets, the more you're right there with a stop loss next to you. It's not necessarily, I would prefer moderate against the quickest possible, for example, because exactly the same concept. I don't like the unknown side that do appear at some point. I don't like that uncertainty. And if you tell me to be 7 times in a such space compared to 5 times, I do consider that 5 times are valuable, even though I have to make just $420 more. Right, so I have to do $420 more. Remember, these companies are telling you to build slowly your account and trying to compound and compound and compound like that. But the thing is, the losses are inevitable, and slow compounding does work if you have winners that you let to run. If you caught your winners because of consistency, then that strategy, which is usually promoted by prop firms, is not functional, guys. You have to let your winners run, which is something you cannot do, because the extra money you make by letting it run compared to a prop firm where you have to cut it down due to the fact that you need to respect consistency, right? So a prop firm always requires you to respect consistency. That tells you it always requires you to cut your great entries early and miss profits that you would earn on your private resources. Right? So if you would have out there a trading account with your private resources, you would let your trade run a lot more, because the danger, the exit, is based on the technical side, not based on the finance. We don't exit due to the fact that it is $200, $500, $1,000, $3,000 today. We exit because this is the place we expect the pressure of the bears or of the bulls, depends what you trade, is supposed to increase. And it's dangerous. It's no longer worth it. And it's possible for a reversal appearing. So we have to get out at a certain level, which means not based on the dollar, but based on the technical and price action analysis, which is kind of telling us with a probability rate, where could we expect the energy to step into the market and probably reverse it, right? Which is something we don't want. So we are exiting at that level, but that's based on the technicals, not based on the dollar value. With prop firms, you got to exit based on the dollar values. Because if you let your traders run, which is something professionals are doing, and that's this is something that separates people. The way they let those professional trades run. Some allow just a little movement out there, but then they're no longer feeling comfortable. They would like to cut it early and secure profits. Others are feeling comfortable sitting in profits and allowing those trades to be maximized. This is the difference. That's where the difference is being made. The way you maximize a trade that you are allowing to run. This is what makes the difference on the long run when it comes down to professional trading. But this is totally excluded with prop firms because you have to cut it early based on the dollar value. Otherwise, you're not going to respect the 20% consistency. And what does that mean? That means it forces you on the other side. On the side of great entries, constant great entries. Constant good stuff. If you don't have a constant great ratio, an amazing ratio of good entries, you're not going to be able to do this, right? So they actually require you a much better performance, and they put pressure on your entries by requesting you to cut your profits early with this specific 20% consistency concept. I'm not saying the consistency value should change, because that way the prop firm is going to probably go bankrupt, and we have some clear examples out there even with 20% consistency, but with other rules set extremely wrong, it wasn't sustainable. It's simple. You only qualify if you have the specific skills for prop firms to make money. Other skills are needed when it comes down to a lab trading with your own resources. It's a total different thing, fellas. Great. So then the third option here is the comfortable approach. I've called it comfortable, but 12 days of trading allows a lot of the room and just only requests you $625 that has to be earned daily. But again, I have a problem with the number of days, 12 days. The more you're exposed, the more chances are for the inevitable, for the unexpected to appear, which is something the markets are always showing up. The more you sit in the markets, the harder it is. So in the props, if you talk about your personal and live accounts, it's total different, fellas. It's total difference, especially you can do swing trades, you can allow your trades for multiple days, and it's a total different business out there. In this case scenario, I have a tendency most of the time to secure as fast as possible, to go with bigger sizes, and I don't mind if the soft breach daily loss is touched, because usually that's recovered in 2 days or 1 day and a half, let's put it that way. I mean, if I lose $3,750, which is usually extending into $4,000 because of commissions and so, plus the market order that's triggered, it's gonna take a bigger loss for sure. So 4,000 around that one, if you allow for the soft breach to be touched, if you don't set a stop loss earlier, then in 2 days you can recover that. Or if you go for $3,000 a day, which depends of course on the number of contracts and whatever you're trading, but on the NQ, total size contracts, max contracts, 15 on a 150k account, right? So 15 NQ means 10 points for $3,000, and just about 12 points for the stop loss. Obviously, for the daily soft breach, obviously in terms of the risk management, this is wrong, this is terrible, unless you have a specific strategy that works because of your entries. So putting out general numbers in the way your risk and reward should be is never a good thing, because every single trader has specific and custom and unique characteristics, skills, and capabilities. So even during your journey, you have to adapt to your current situation and the situation that you see in the markets. It's not something that you can work with as a fixed procedure, because you have to deal with a dynamic market that is requesting you to also be dynamic. So that's something I would say. For me, it worked to make great money on props. Obviously not on personal. That's a different thing, guys. Personal and live funding, it's total different. You need to have a different ratio there. You need to have a different ratio that sits towards the profit side much better than what you're willing to risk in terms of that entry, right? So it is total different, which is why a lot of the people fail from the simulated funded into the live. It's not something that I consider at any level something quite similar. No. Yeah, that's pretty much all about it in a nutshell. There's going to be more videos like that where I'd like to share with you things around the business. But these are the numbers you could consider, guys. So it doesn't necessarily mean if you're targeting less per day that it's going to be easier to reach to those number of days that are required to fulfill your consistency along with the profit target. Just like if you're not having that specific skills and style to trade quick as possible, then obviously you should not do that. You need to understand that in such situation, the loss could appear in 15 to 20 seconds. It could hit your daily soft breach, right? So it has to represent great entries. That's, number one criteria and the most important thing when you deal with a such business model, that the entries must always be good. And of course, risk management is another top thing out there. You cannot afford basically any room out here because of the, soft breach. Beautiful. That's all, fellas. I mean, if we wouldn't have soft breach touches, then for me, for strategy that I consider it give great results, it would be even better. But the company sets this stop losses on a soft breach on the daily side to pretty much cut you out quite early and no longer allow that kind of a volatility and room. It's benefiting them, not benefiting the traders in a nutshell, for sure. Traders that have those strategies. Of course, there is the other way to make $200, $300 a day stable with a stop loss at $50, right? You lose $50 or you make 200 in a trade. That's possible, but I prefer doing those things in a different place with my own resources on my own accounts, right? I prefer doing it over there instead of props. When it comes down to props, I prefer to, run on a higher speed. It's probably the best way to call it. Run on a higher speed, on a faster way to deal with multiple firms and allow myself, based on the skills and strategies that I know how to control and deal, to consider a beneficial approach this way. I also don't want to spend, hours and hours trading props. I'm trading props usually 15 to 20 minutes and it's over. It's either good or bad and that's it, right? So that kind of a thing is the props at the moment in my schedule. I do have other things to trade as well, which is why, I have to diversify this time and spread the resources in the best way possible. That's where we are, fellas, with this one. Let me know your thoughts in the comments area. Subscribe to the channel, like the video. You can join my Discord about props as well, and you can be part of our great community. Ticktick Trading offers the 50% discount for coupon code SCRAMBLE at the checkout. The link to sign up is in the comments area. It's pinned right there. We'll talk to you soon.